Welcome to the channel. Yes, it is now official. The first Bitcoin exchange traded fund ETF started trading in the US on Tuesday the 19th of October 2021. And ProShare Company is the first to roll out the first futures ETF with the ticker symbol BITO. Is it a good news for Bitcoin investors? What does it mean for the future of Bitcoin? Are there any potential risks embedded in the future ETFs? These are the questions we shall examine in this episode. So stay tuned, grab a cup of tea, and then subscribe. Okay, now, for those who do not understand the concept and the attributes of ETFs, let me break it down. You see, ETF is a diversified asset class. It is a combination of hundreds and thousands of shares or bonds. Again, it is very simple and economical because with ETF you can access the entire market index with one fund. Okay, now the question is, how does it work? Well, an ETF works like this. The fund provider owns the underlying asset, design a fund to track their performance, and then sell shares in that fund to investors. Shareholders own a portion of an ETF, but they don't own the underlying asset in the fund. Meaning, ETFs give you a way to buy and sell a basket of assets without having to buy all the components individually. And they often have lower fees than other types of funds, depending on the types of ETF. Anyway, wait, let me break it down. Let's assume you do not understand what I've just said. You see, a Bitcoin ETF is one that mimics the price of the most popular digital currency in the world. This allows investors to buy into the ETF without going through the complicated process of trading Bitcoin itself. Moreover, because holders of the ETF won't be directly invested in Bitcoin itself, they will not have to worry about the complex storage and the security procedures required of crypto investors. Okay, now, I am convinced by now you have a better understanding of the meaning of ETF. That said, right. Okay, now let us talk about the future-based Bitcoin ETF. Though the future-based ETF have the same concept with normal ETF, however, it is slightly different. You see, ETF futures operate much the same as a normal future contract. This contract never take possession of the asset, but keep the capital moving from one basket of futures to another. Okay, here's the difference. It means investors don't have direct exposure to the underlying asset and must deal in cash. Besides, most ETF futures track the commodity and currency markets. Now, I am convinced you got the picture. Essentially, the price of the ETF won't be pegged. I think you'd like to know what it means. In that case, stay with me. Let me explain. You see, first, it's important to understand that investing in a future-based Bitcoin ETF is not a direct investment in Bitcoin. A future-based ETF tracks future contracts rather than the price of an asset. As a result, a future-based Bitcoin ETF will track Bitcoin futures contracts, not the price of Bitcoin itself. Therefore, the price of ETF will not match the price of Bitcoin. Now that you and I know the difference, so what is the implication? Good question. You see, this difference can be a risk, according to John Fonda Delene of Wealth Management, who talked to CNBC recently. He stressed that the price of future-based Bitcoin ETF could trade at a premium during a bull market or at a discount during a bear market. Again, some Bitcoin Bitcoin supporters do not share or seems to like the idea. Some even said it could lead to Bitcoin price manipulations and argue that investors are better off and are most likely to generate better returns by buying Bitcoin directly. That said, so what are the pros of buying into a future-based ETF? Well, to tell you, I've produced a video on the advantage of owning Bitcoin ETF titled Buy Bitcoin ETF, What are the reward and risk? I did explain everything in that video. You'll see the clip at the end of this video. Meanwhile, let me tell you the benefit of owning a future-based ETF. You see, a future-based ETF could be helpful for those unsure of how to safely buy Bitcoin, like I mentioned before, or those who prefer not to have the responsibility of protecting and securing their Bitcoin wallet. The price of Bitcoin often swings as well, so an investor buying the cryptocurrency directly will have to be able to stomach the volatility. Okay, now let us look at more risk and uncertainty embedded in this financial instrument or vehicle, if you like. You see, future-based ETF could potentially be more expensive than investing in Bitcoin directly. That's because there are several additional costs attached to the future contracts, the ETF charts, which can impact the price investor end up paying. You see, in addition, an ETF will require many middlemen in the investment, including hedge funds and ETF providers, says John. One of the man I mentioned earlier on. Some in the crypto space says that ETF will benefit these middlemen more than retail investors, especially if the ETF trades at a premium during bull market. Again, quote, hedge funds get to capture those returns, end quote. Crypto investor and former hedge fund manager Rao Paul tweeted on Friday, and I quote, Wall Street gets richer, retail investors lose again, end quote. So the middleman creates and represents centralization as against decentralization of Bitcoin, a peer-to-peer network. In my opinion, all cryptocurrencies, which include Bitcoin, are speculative and volatile, which means there are risks and uncertainty in these digital assets, and any exchange or company that owns and trade them could transfer the risks. Therefore, you and I should invest in whatever we can afford to lose. So, what is your opinion? Please state it in the comment section. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.